Good morning. My name is Vince Lancy, and this is the Goldfix Morning Rundown. Today, we will be talking about, of course, gold. 3,500, taking stock of gold's move. We are on the cusp of that. It may or may not happen, but it's probably as good a time as any to do a little back check on where we've been. The other discussion we're going to have today is for new subscribers. And we're going to do that right after we do a quick rundown of the markets. So let's go with it. Ten-year yields are 440, down 1. The dollar is 98.52, up 20. The S&P 500 is 51.96, up 40. The VIX is 32.25, down 1.5. Gold is 34.61, up 37, off its highs. Silver is 32.71, up 9, off its highs, such as it is. Copper is 478, up almost 9 cents, up almost 2%. WTI is 63.64, up 50 cents. Natural gas is 307, unchanged, almost perfectly. Bitcoin continues to climb in a methodical fashion, 88,000 and change, up 1,200. Palladium 944, up 10. Platinum 966, up 3. Gold, silver 105, and still climbing. Soybeans 1032, up 5. Corn 477, down 2.5. Wheat 546, down 5. A mixed bag, but pretty violently. That's a pretty big move for wheat. Okay. Returning viewers and readers, you can skip this part. We'll put the timestamp in there if you like to do so. This is a message for new subscribers. The recent interest in gold, for obvious reasons, has brought many new readers to the site. We're both thankful and grateful for that and hope it continues. Since there's very little marketing on the site, or very little accurate marketing, we should say, perhaps this message will help those looking for a quick introduction to what we do here. Goldfix is a newsletter focused on the gold and silver markets, along with the geopolitics and macroeconomics that surround those markets. Because gold is money, we talk about money. We take an integrative approach to understanding precious metals within the global monetary system, macroeconomically, geopolitically, and obviously monetarily. The site does quite a bit of cross-asset analysis. As such, we take a Big Ten approach to markets, incorporating disciplined fundamental breakdowns of reports, flow analysis focused on participants and regions, and a light smattering of technical analysis, mostly imported from people who know the discipline better than we do and can withstand our abuse of poor technicians. The point is, if you're here for gold, you're going to get probably more than you bargained for. You might even get overwhelmed and turn it off because there's so much on gold here. But if you stick around, you'll see that everything going on in the world can be viewed through the lens of what we discuss here. Again, to the new people, if there's something to say about gold, we're going to say it. And if there's nothing to say, we'll say that too. So lately, there's been a lot, fortunately or unfortunately, if you're long stocks. Finally, we'd like to voice our appreciation for being ranked among the top 10 rising finance publications on Substack. That's essentially a momentum indicator, and for cracking the top 50 financial publications overall, which is a more meaningful event, we think, on the platform. That's pretty impressive when you consider our asset class is still often called a pet rock. I guess that would make us a piece of paper the pet rock's paperweight was holding down. So, yeah, pretty cool. As for our origins, Goldfix started almost as a hobby, an outgrowth of Larry Benedict's opportunistic trader project. He was a market wizard that asked us on board to discuss precious metals, and we were honored to do that. And we were affiliated for a time while that was going. COVID gave us the time, and this is the result. Again, thank you for making it what it is. Oh, one more thing. The name Goldfix, paradoxically, comes from the event once held every morning in London, literally called the Gold Fix, where market participants manipulated the price of gold lower. The irony isn't lost on us. Have a great day. Here's a sample of, again, we're talking to the newer readers here, but we want to go through this because this is for everyone. This report up top here, UBS, there's room for gold to run higher. That's an analysis of a report by UBS, as well as a voice note describing why it's important because of its focus on China. The dollar just lost its moat. Goldman predicts a 20% decline from here. Whether they're accurate or not on the prediction, the explanation of why is absolutely correct. Goldfix PM, that's a combination of reports. Ed Yardeni, the famed Ed Yardeni, thinks 4,000 for in 2025 and 5,000 in 2026. COMEX Death Watch, that's a comment on the exchange that we started on itself. China now sets the gold price. We go through the history as well as the implications of that for the dollar, not just the gold price. CFTC analysis, China in charge. That's a very wonky graphic interpretation of what's going on at the flow level through using the CFTC data that tells us China is the buyer. If it's not obvious to you already, it's very obvious that they're taking on all sellers, including existing longs. 3,400 gold and the widening gyre. That was yesterday, and the implications behind that title are things are getting worse, they're not getting better in general. And then Hartnett, gold to hedge New World Order risks. Michael Hartnett is a famous macro analyst, very well respected one. I don't know if famous is the right word. How did we get here? That's written by a guest writer who has geopolitical expertise based in Asia. He's from China. We won't say which one, but he's been spot on in his assessment of the Trump-China escapades, for lack of a better word. And people that read him really appreciate his work. All right, here we are. Let's do what we're doing. Taking stock of gold's move so far. A cursory glance at some charts that give us a little bit of perspective on where gold is and where it could be going using some historical observations. Right there, I don't really know what order I'm in here, so let's start with this one. Let's start with the first one. This is probably my favorite chart, having discovered it about a month ago. That's the S&P versus gold, or divided by gold. So above the green line, that would be, well, the green line is the number 2. So the S&P 500 above that line is worth 2 times gold, and below that line, it's worth less than 2 times gold. We think it's important, or it was important when we noticed it, because gold really only penetrated that 2% area on a meaningful basis twice in the last 20 years. And the first one on the left-hand side, that is the great financial crisis, and the market stayed down there for quite a bit. And the second one, that was during COVID, and that was short-term oriented. And here we are again, now trading at, you can't see the numbers there, but I'll include these graphics at 1.59. So this is one example of the gold market versus the stock market and how things are going. We don't really think it's going to get back above there anytime soon, but who knows? This is the Mag 7 versus the GDX. Gold miners have just really done poorly for the longest time, and the Mag 7, the darlings of the financial media, have done well. This is a ETF called MAGS, which is the Mag 7. It started, I think, in early 24, and so we go back as far as we can on the data there. And you can see that for a period of time, it was trading sideways. That's in 24. And then when American exceptionalism started, or the chatter about it, it started increasing substantially in November. And it had always been above, the GDX. You can't see the numbers there, but when it's trading in this range here, I'll draw a little bit of line here for you. When it's trading in this, oh, that was a mistake. This range here, well, that's 8 times the GDX. And now we're down to -10. I'm not sure what these numbers mean anymore, but they certainly are interesting. Next chart. This is gold versus silver. We have been on here's the bad news. We have been on a trend higher since 2013. In that channel, here, I traded long silver and short gold during this channel, and I got completely annihilated, thinking that silver would catch up. But now, historically speaking, this is when China started de-dollarizing. Okay, in 2011, remember, gold went to infinity after the euro crisis, and then silver followed it afterwards, which is probably what's going to happen now. And around 2016, 17, I figured out I was wrong after making, pennies when everyone else was making dollars. And then this channel started and it was lower. And for the life of me, I was praying that it was going to break this line and it never did. And now it looks like it wants to be in this area. Now, am I saying it's going to go up to this high here? No. I am saying that as long as central banks are buying gold and not buying silver, which will be forever in the West, and as long as gold is useless, literally, because gold is useless, that's why they're buying it. It can't be used industrially. And because it can't be used industrially, it's the perfect safe haven. It is a pet rock. And if you want to take your money out of the system perfectly, you take it and put it in gold. You can argue Bitcoin, that's a different conversation. But silver has economic aspects to it. And as such, they're not accumulating it. Now, I think that this will change. I don't think we get to this high. But if we do, and July 6th through the 8th comes, I believe that silver starts to catch up then. I believe the central banks in the East are buying silver as a critical asset. Russia announced it, and I believe that will continue. So as long as silver stays cheap, there will be less silver available. Next, gold versus bonds, or GLD versus TLT. What can you say? This is something we were actually long because of inflation coming back as a fear. And we got out in this area here. My goodness, look at this. This is what de-dollarization looks like. This is what the world selling bonds because it's worried about the US as a global reserve currency looks like. This is an American asset, but it's focused on international flows. This is gold versus the ES, the gold futures versus the mini S&P. And you could see that's a rounding bottom that's being broken out. If you're a technician, that's a buy, even if it doesn't get above this area tomorrow. This, nothing meaningful comes of it, but this was MACD versus gold going all the way back to 75 when the contract started. And what can you say except that it's on all-time highs? This is probably more meaningful. Zero Hedge and the Marketeer mentioned this morning, so we did our own look back. This is RSI, something more people can get a better handle on. RSI is trading 86.75 on the monthly chart, which is even higher than the 1980. No, I'm sorry. It's higher than the 2008, 2007, 2008, 86. This was 86. This was 80. This is 86.79. The month's not over yet. And this was something like 92, maybe as high as 100. That's 1980. So 1980, 2007, now. Overbought doesn't mean overdone, as we've seen for a while there. But historically speaking, this is pretty crazy. And the fact that no one in the government is talking about it, at least in a negative light, should tell you something. Nobody's pouring water on this yet. And you've seen that already. Here are a couple charts from Randall Blava at RBLAVA. We'll give you his link. He's a founder at Goldfix, and we talk about certain relationships, and he has a knack and an ability to put those in a graphical situation so everyone can appreciate it. The histogram is open interest, and what you can see here is the open interest is dropping as the market is rising. But it's not just any open interest. It's participation by funds. Funds are getting out while the market is going up. So if the funds are net sellers while the market is going up, why is the market going up? Because the banks are getting squeezed. This one is another representation of that. We want to draw your same idea, but this is total open interest. I want to draw your attention to this here. This is the day that someone opened contracts on gold post first notice day to take delivery. It wasn't a fat finger. It wasn't a spoof. It was a potentially manipulative attempt to take delivery. And that was stopped. This isn't the first time this has happened. We learned of it in 1993 when we were just starting, that George Soros tried to do the same thing. But you're hearing it from us. That's what it was. Somebody tried to take delivery, and the COMEX said, no way. This, more recently, there is a historic perception, correct, that gold over the years, it was back tested in the 90s by us and other people. But when gold has a 2% rally, often it's down 4% over the next 2 weeks. And so over the last, this goes back to April of 24, we started to see more and more 2% rises. That's 2% with less big, steep sell-offs. Now, we had a couple sell-offs here. This is after the election. And then we had a couple of these, which is pretty impressive. And then the market went up. So this, we're talking about 3% moves here after 2% plus down moves. This is smart money buying on the dip. And this is big money buying on the rally. So this is a new regime. This chart, probably more than any other, tells us a new regime. If you go back and test it yourself, between 1993 and 2011, any 2% higher move in gold was met with a 2+% sell-off over the next 2 weeks. There was an unwritten rule. You don't let it go up more than 2%. Maybe the new 2% rule is 3%, equaling $100. We don't know. But that's it for now. There's plenty of other good charts out there. That's just stuff that we looked at today. Broad markets recap. Wall Street ended sharply lower as President Trump escalated his attacks on Fed Chair Powell, worrying investors. Long-dated Treasury yields rose while the dollar slid to a 3-year low. Gold prices surged on safe haven bets. Oil fell on hopes of U.S.-Iran talks and demand concerns from ongoing trade tensions. Canada's main stock index ended lower, led by a decline in energy shares as investors were jittery after U.S. President Donald Trump's criticism of Federal Reserve Chair Jerome Powell. Toronto Stock Exchange TSX Composite ended down 0.76. However, I'll throw this out. I threw this up there for the gold guys. Nova Gold, Torex Gold, Orla Mining. Look at those gainers. Those were the gainers. Pretty cool. Something that just came out, we want to draw your attention to, just came out off the wire tape. Goldman Sachs CEO Solomon on tariffs says it would be good to see a deal or two put forward. Now, this is, I think, an important statement. He's voicing concern at the first level that because there's been no news coming out of the Trump administration, that the market is taking that as a problem. And the market may be correctly doing so. I would also note that for him to say that means that maybe something is about to come out. If not, stocks could head a lot lower. Donald Trump has made it clear that he's not this time around going to make many announcements and marketing ploys. He said that recently, but he has said that he's working on some things that are starting to bear fruit. But we haven't seen that yet. We will see if it comes true. Data on deck. Today is Tuesday, 9:30 a.m. Philly Fed. President Fed Harker speaks. But the reality of it is that you have 3 data points in small picture there. Fed Composite Index. It's basically the Richmond Fed data. It starts at 10 a.m. Not a big deal. And we would say in premium, there's actually even more than what you're looking at today. So to the new subscribers, thank you for joining. And to the subscribers that have been here for as far back as COVID, thank you for helping to make what it is. Have a great day. Before I sign off, let's do a quick look on gold. Okay. The trader in me says beware. Long wicks above at the middle of the week. Tuesday is the beginning of what could be a trend week lower. This could be the end. I'm not throwing water on it. I'm just saying, unless the fundamentals change, unless there's a news item, every dip will be bought. All right, I'm Vince. Have a great day.